Hi everyone. I noticed Spinneys is offering its shares as an IPO, so I downloaded a 240-page document to do some quick analysis on whether to buy or not, because the IPO is in 3 days, April 23rd. First red flag, their online sales are only 13%, and I don't see any plans to improve that. This is a big red flag. The revenue is 9% this year and 5% the year before, so that's 7% in the last 2 years, which barely beats the food price inflation. Remember, this is revenue. So out of that 7%, 3% is just the food prices going up. One good thing to note, overall the recommendation is not to buy, but they target the more affluent Western expats, which is a very good demographic to target. But it's not enough to invest in a company. Another good reason to invest, but again, they don't have enough of it, is they have some exclusive brands, such as Heineken, Zero, and Root Health. But again, it's only 2 brands, and the margins on these brands are really well, almost 40% margin on the brands that only they're allowed to sell in UAE. But again, it's only 2 brands, and it's not like Coca-Cola or anything crazy, so it's not a very big competitive advantage. They do plan to attack the Saudi market, so that is one avenue where they might be increasing their market share, but it has not happened yet. Fun fact, Spinneys is almost exactly 100 years old. It started in Egypt. I didn't know that. And it's been in UAE for almost 60 years. Wow. Not a reason to invest, but fun fact. See, even in their own risk disclaimer, they acknowledge that they need to do more online sales. But I'm on page 84 and there's no mention of any plans to increase online sales. Again, that's by itself is enough not to invest in a company for me. It's really funny how they've identified the same risk in their own disclaimers, but why aren't they doing anything about it? There's a big jump in their assets from 149 million to almost more than double. I wonder if there was an acquisition or what happened exactly, but this is a very big change. So one good thing they're trying to do is to distribute about 70% of their after-tax profits, which is a significant way to earn stakeholder trust or potential investor trust. Because that's what investors want, So they're sacrificing growth to get more investors interested. And again, this is a positive point for them. Still overall not convinced, but good. So new stores typically have a payback period of less than 3 years. This is a bit mind-blowing, and it makes me think Spinneys is in a good position to franchise their business model. And expand further, rather than to become more decentralized and franchise at least to the other countries in the JCC. But again, I didn't read anything about franchising. Yeah. So a reason for their high cost structure is the Emiratization. They already have almost 11% of the group's workforce Emiratization, and that's usually not the lower level employees, it's the middle management and the top management. So there's a lot of compensation going for that. I know they spin it as a good thing and it might get them some Emirati investments, but generally speaking it just increases the cost for the company. Anyway, that concludes my study of Spinneys. From the initial review, it's not a company I would recommend investing in. Usually the next step would be to do a thorough financial analysis of the company health, but in this case I'm not doing that because I've seen enough. I wish them luck. I don't think it's a horrible company, but it's not something I'm looking for, and it's a very modest growth. Yeah. Let me know if you have any comments, suggestions, or responses. Good luck.